Hi guys, welcome back. Today we'll be taking a look at Li Auto. Before we begin, remember take a second to give the video a like and subscribe to stay updated with the market. Do note that do not provide any buy or sell calls, but focus on the potential traps set up by market makers. Without further ado, let's take a look at Li Auto. So Li Auto had quite a good rally from a low of 1686 to a high of 2969 before pulling back. So looking at the Fibonacci retracements of the pullback, this 61.8% at 2479 seems to act as a pretty temporary support before we drifted down further to this low of 38.2%. So you can see that the bears were pretty strong, and we even managed to break down this 21.76 on a couple of occasions. And thereafter, we went back to retest the high of around $24. Unfortunately, this previous support has now turned into resistance, and that is not a good sign for Li Auto because we are actually creating, you can see that this high here. So this is a lower high, and this is also once again a lower high. Likewise, this is a lower low, and this is also a lower low. So that is a very bad sign for Li Auto in the short run because it seems like the trend will continue to remain. So once this support is turned resistance, we are looking at this new Fibonacci retracements from a low of 2050 to a high of 2969. So let's take a look at it. We were able to go above this 2401 and 38.2%. Unfortunately, if you look closely, we were rejected off this cloud resistance and acted as a very, very strong cloud resistance. And even this red baseline, we were not even able to test it. So it shows that this particular counter is pretty weak, and this red baseline is currently at 2510, which is about $4 to $5 away. And this blue line here, this blue conversion line is at 2245, which is about $1 to $2 away. So if we do not go back above it quickly, and if we do not make it turn into a strong resistance like this particular day here, then unfortunately we'll start to break down further. And if we were to break down further, then I'm looking at this next support here at 1989, just below this $20 psychological support. Because if the psychological support is at $20, then it's high chance that many retail investors will be putting their stop losses at perhaps around 19.7 to 19.9. So once these stop losses get triggered, then there's a chance for a short-term rally up. I'm afraid since this is a lower high here, there is a possibility of us creating a lower high here as well, unless we are able to have a more power to send us back up to retest the highs of perhaps 24 or even 25, $26. If not, the chart will still continue to remain bearish. And if this 1989 were not to hold, then there's a high chance for us, this previous resistance here is very critical for us to turn to support here. Unless if we were to break down, then likely we will test this lows once again, which is a 32-week low, and it's at 1686 rather. So let's move on to the one listed at Hong Kong, and this ticker is 2015-2015. So it's a very similar pattern. Started at a low of 67.30, and then we went to a high of 113.7. So we started to pull back, and you can see that this 61.8% at 95.95 acted as a temporary support. We went back up, but we were rejected off this blue conversion line. So it acted as a very strong resistance here for this Li Auto 2015. And thereafter, we started to go back down to the bears actually pushed the stock all the way down to 38.2% at 85 psychological support level. Once again, we broke down this 85 is potential stop hunting here. And some retail investors actually put below just $85. And you can see that we flip back up. But even if we do flip back up, now this baseline here has acted as a very strong resistance for this particular counter. And once again, you can see the previous support has now turned into resistance. There is not a good sign because it's on a downtrend. This will usually happen. And it's an indication that the trend remains bearish. So from a low of 8250 to a high of 113.7, let's take a look at the Fibonacci's. So we managed to close this 94.40 at 38.2%, but we did not clear this 98.10 at this 50%. In fact, our high was 97.85. So it was shy of about 25 cents away from this 50% resistance here. And if we do not cross above this 61.8%, back above this $100 psychological support, then unlikely for us to remain bullish. So the bears are still in control, and they're likely to push the stock back down. So the support that I'm looking at is this particular low here at 82.50. In the event that we do break down this 82.50, then it's likely for us to test the $80 psychological support, and just below this $80 psychological support, we're looking at $78 to $79. So there's a chance for us for some stop hunting here at this 23.6%, 78.25. But the fact that we already have went to this last support level is not a good sign at all, because there is essentially only this last support that we'll be looking at 78.25. If we were to break down, then likely for us to has this $70 psychological support before looking at this 67.30 low once again. So there is always this possibility for us to retest the lows. Let's take a look at the potential wave patterns. So from a high of this high was 113 and to a low of around this low was around 82.50. So there's a possibility for us to create this wave pattern to retest back these lows of so there's this wave pattern here. First wave, second wave, third wave. Likely to retest back these lows, and hopefully we can get a double bottom in the event that this 82.50 were to break down. So if there's any changes, I'll give you guys an update. Thanks for stopping by, and don't forget to subscribe as you keep the uptrend channel intact. Till we meet again, appreciate the manipulation.